Hello traders, this is Rich Derrick from Tradesight. Wanted to take a few minutes here and take a look at the current technicals in Apple. Uh, Stocks had a very significant drop of about 200 points from 700 down to about 500. So I thought it'd be a good time to take a look at this and see what the key levels going forward are going to be. So the first thing I want to take a look at is going to be the May lows, which happened right in here. Okay, this is definitely going to be a key area going forward. This is 528.66. Now I've just added a trend line here to represent that level, that 528.66. We closed on Friday just below it, just about $1 below that. So they brought it back up to that area, and I think that's just the beginning of showing how significant that level is going to be. That definitely needs to be reclaimed by the bulls to have the potential here to change this chart to short-term positive, which it is not right now. What I want to do now is let's drill down to the daily time frame and take a look at what's happening with the Tradesight Seeker. Okay, now we're back down to the daily time frame, and here's the Apple chart in the daily time frame with the Tradesight Seeker plotted on top of it. Here's the first impulse to the downside here off the top. Got a 9-bar count there, but we didn't really break down through the static trend line until the second wave, which became a little bit more serious and had a little bit more momentum and velocity to the downside. We did complete 1 through 9 here in the Seeker setup. Now we've proceeded into the 1 through 13 for the buy countdown, which is going to identify the exhaustion point. We haven't gotten there yet. Actually, as of Friday, we're 8 bars into the countdown, looking for 13. So I've still got a few more bars to go before we get to that high probability exhaustion point. It's close at hand, but it's not here yet. One other thing to keep in mind is we did have a somewhat bullish close in the chart. You see the big tail that's left down here where the buyers were able to snap it up. Probably some shorts taking some off the table. I'm sure some of it was also options related. But remember now we're below the 528.66, and even though we've closed above the open and had a positive day, leaving that tail, we haven't even gotten into the halfway point of the range of the prior candle that was down. So no key reversal here just yet. Next thing I want to take a look at would be the Murray math levels. That's something else that we look at every day at Tradesight. These are very, very key support and resistance levels. So let's take a look at how the Murray math levels are playing out in Apple right now. Okay, so back to the daily chart. Now what we've done is we've added the Murray math levels over the daily time frame here. Now there's really 3 major levels that are extremely important. The 8-ace level, which is up here, represented by this blue line at 625. Then there's the 4-ace level, which is the midpoint of the box. That's 562.50. And then the 0-ace level right here, again the blue line, and that's 500. Price got down close to it on Friday. I think we got down to 505 3/4 on Friday. So this area right here of 0-ace at 500 should be a very, very key level of support, and if broken will be very, very notable because we already frame shifted back in this area here on this break that moved the box a little bit lower. So 500 is going to be that key Murray math 0-ace level that we're going to be tracking going forward. So expect big interest, at least initially, in the 500 area here for Apple. One more thing that I want to take a look at is I want to take a look at the MOB level off of the eSignal Advanced Get tool. So we're going to take a look at the MOB now. I'm going to switch the chart one more time here. Again, we're still looking at the daily time frame here. Okay, back to Apple in the daily time frame. This time I've just compressed the chart here a little bit so you can get a little bit better perspective. So what we want to do is take the last real reference low, which would be this inflection point here. We had a Seeker exhaustion 13 up here, not depicted on the chart, that turn the chart back down to this area, and again, this is that May low in Apple that we had earlier this year. Now this is the reference point that we're using, and off of that reference point, what it's going to do, it's going to take the high here and project where the stock can go to without being fully broken. So that's the nature of the MOB, the MOB, the make or break. Projects this level right here, this box. You can see that we got down just to the very, very upper window of that box on Friday. Midpoint tends to be a little bit stronger when you get down to the lower fringe of it. Then the chart becomes a little bit more trouble, and if we break below that, then that's going to kick in probably a new wave of momentum. One thing I will point out though is generally you want to be between the time bands, which would be in this area here. If you hit that a little bit earlier, it generally implies that there's good velocity and momentum to the downside, and it makes this level a little bit more suspect. But right in this area, it's still right around that 500 area. So we've got the Murray math level at 500 plus the combination of the MOB off of the advanced get tool. So that's going to be a pretty strong level here going forward in Apple. All right, folks. So just to recap, there's a few levels to take a look at here. Obviously, that 528 low that was put in March is going to be key. We just took a look at the Murray math level at that zero waste level at 500. It's going to be very, very important. The combination of that Murray math level plus the MOB that we looked at is going to give that a lot of importance going forward. The other thing to keep in mind is that 562.50 level in here, which is going to be the 4 ace level. So any return back to the upside here, that should be evaluated as an obvious first target if the trend does reverse back to the upside. How do we define when the trend is returned back to the upside? Well, that's going to be the 10 EMA. If we get to close above the 10 EMA and then break above that candle by at least one tick, that'll be the qualification that we have returned back to the upside here. So that should be the indication that we're going back to the upside here. The other key level so far is the November low, which we set on Friday at 505. Don't know if that's going to be a key level. We don't know if that's going to hold up, but if it does, that's going to be an important level if that does not get undercut. So if you have any questions, feel free to pop into the Tradesight lab. You can take a free trial. We can talk about this and go over technicals even in more detail and take a look at some different time frames as well. And again, this is Rich Dare from Tradesight. Thanks for listening.